Today's presentation will be primarily focused on credit analysis and risk management for global enterprises. For many of you, you know some things about AI. We're all in probably a little bit different space in terms of what our knowledge level for AI is, but hopefully today you'll come away feeling somewhat like an expert in the space. So a little bit about me. I'm Phyllis Saavedra. I'll be leading today's session. I come with several years of experience in the order to cash space, both as a practitioner, as a consultant, as well as selling software. Our webinar today, our masterclass today, is being sponsored by Emagia. A little bit about our company, Emagia. We are an end-to-end order-to-cash solution. We cater to large enterprise customers in need of AI automation and finance transformation in the order-to-cash space. So everything from customer onboarding, credit analysis, collections, and cash application, along with data analytics and AI agents most recently. This is not a sales presentation. For those of you that are curious, I just want you to know a little bit about who we are so that you can understand the credibility of what we've been doing and how long we've been doing it. We are a world-recognized company. We've been recognized by Gartner and Hackett and various other industry professionals as a leader in our space. And so, yeah, we're very proud of our success here at Emagia. So with that, let me get started. I'll go over the agenda that we have for today. It's going to be a quick 30-minute class. We're going to talk a little bit about the difference between traditional AI and then agentic AI, AI powered for credit specifically, but how we're seeing the paradigm shift between traditional AI or generative AI to agentic AI and a continuous monitoring of credit and the credit process. We'll talk a little bit about how AI agents will help in areas such as automated sanctions and KYC, know your customer screening, things that a lot of us that work in the multinational, multi-global space need to know. There are a lot of regional requirements and I guess I would say a lot of regional requirements and things that we need to do to be global practitioners. We'll next talk a little bit about data ingestion, how we take the credit data in, how we take all the information in through the AI agentic process, how we can do integrity checks, and again, a little bit more about compliance. Then we're going to end up today talking a little bit about some real life use cases that will help in case you're looking for something to take away from this class. So I'm going to start really with an analogy. A lot of people today have or want smart homes. You might have purchased a smart refrigerator or a smart thermostat, anything that sets the time, tells you what groceries you need, turns your lights on and off. Those are great. And that is what I would compare to traditional or generative AI. That kind of thing is reactive. They don't talk to each other, but they do something for you. They perform a task for you. What we're looking for is something like a house manager. In the future, what we're looking for is something that connects all those smart agents within our house. So the lights talk to the refrigerator. The refrigerator knows what to order. It sends something out to your grocery store, sends a list of groceries out that you need. And all these things work interchangeably. You've got this sort of estate manager to execute tasks, and it works well for you. What a lot of companies are facing today with generative AI is that their data is locked into silos and your systems don't talk to each other. We are trying to get people to better understand agentic AI and how it can work for you. I hear frequently from finance executives, I need an AI project. I need to do something. What am I going to do? How am I going to do that? And I think what we can talk about a little bit today is how you can get there and how you can use generative AI to assist in your processes going forward. So, what is the difference between traditional generative AI and agentic AI? The primary difference is historically we were looking at what happened. It was an answer to a question, it was providing content. It required step-by-step human prompts. It follows a fixed path and it reacts to what the inputs that you're putting in. It primarily works within its own interface. So you're in a system, you might be in your ERP, you might be using, say, ChatGPT or Google Gemini, one of these, and it works within its system and it pulls that data in. After the whole thing is over, it generally forgets what's going on. It's static data, it's heavily reliant on very specific information coming in. So what is agentic AI? Agentic AI can manage your tasks through the entire life cycle of the process. What you're getting from agentic AI is the output, and it's giving you an action that you can perform. It actively seeks data, it's proactive, and it's weaving together all these various governance agents that help you to get to an end-to-end task. I think of it like I was just talking to somebody yesterday, and I think about it, it's like building blocks. You build one agent that does this, you build another agent does this, and they're stepping stones. And by the time that you've got 1, 2, 3 agents, you've got your entire task completed. And then the nice thing about agentic AI is it has a memory. It can also reason and plan, and it also has the ability to self-correct. And that is really the key difference. And when you talk about it in terms of credit scoring and credit risk analysis, the traditional way of doing credit scoring was you would get information, you would say, go out to a third party site. You might go out to a site like a Dun and Bradstreet or a Moody's. You'd pull in that information. You'd have some sort of perhaps Excel scoring spreadsheet where you go on and maybe you put years in business, you put a variety of various financial information. If you pulled in any ratio calculations, you'd give everything a score. And with the output of that score would be, yes, I approve credit, or no, I don't approve credit. And here's the credit limit I approve. It's very moment in time. It does not adjust to any future happenings. It doesn't adjust to anything that's happening in the marketplace. It's not real time. And it was really great for onboarding a first customer. In the future world, in the current world of agentic AI, now you're going to have the ability to have ongoing monitoring. You're going to have the ability to shift your focus based on incoming data and its real-time changes. And it's going to really change the way we as practitioners look at the world of credit risk and adapt to our customers' requirements and needs. So let's talk a little bit about real-time monitoring and how we're going to pull in this information. With the agentic system, it does not just suggest limits. That's the old school way. What it does is it helps you to increase credit limits as things go on. The way agentic AI works is you have real-time data hooks where you're pulling in information. You're going out via API to a variety of data sources. So you might be going out on a regular basis to those same sites like the D&Bs, the Moody's. You might also want information from Yahoo Finance. You might also want information from a variety of news sources. You might access a bankruptcy database or ongoing information on any sort of um, sanction databases, information databases. So you end up pulling in information. You can also set rules or guardrails around these rules that come in. So I want a certain rule if it's a public company. I want to follow a different rule and follow this path if it's a private company. You're going to go out, you might be monitoring for any merger and acquisition activity, bankruptcy activity. The key with going out to these variety of APIs is that you can act proactively. And for those of us that have been order to cash practitioners for any amount of time, we know that the order to cash space is no longer just about risk prevention. It's a key role, but it's also about working with your sales team and helping to increase sales. You can utilize these APIs and go out the real-time monitoring to suggest to your sales team, hey, there's been some positive news about this customer. I think that we can increase their credit line. So you can use this to drive sales. You can use this to modify anything, the offerings that you've been giving to your customers. And you can see everything in one place. You can see an application, you can call the credit bureau, you can utilize multiple data sources. And then when it's all over, or you've gotten to the point where the system is about to make a decision, you can also go in and you can email your customer. So it's kind of an end-to-end process if you think about it. You go out, you receive an application in, it sends the information out via API to the various sources, a decision is reached, and then we send our customer an automated email that says, you've been approved. You've been approved for this much, or you've been denied, or you need more, or we need more information. One of the other things that it can do when it goes out to get information is it can also check for discrepancies. So if you have, for example, a privately held company and you're seeing that one source of information is saying that revenue is X and another source says revenue is Y, it's going to give you a chance to look and manage all the discrepancies that are out there. One of the areas that I've talked about is it's really, really important is this KYC, know your customer, and global sanctions monitoring. In 2026, regulators, people like the US's Financial Crimes Enforcement Network or the EU's anti-money laundering agency have really moved to a zero tolerance policy with most companies. If you've read anything about it, anybody that violates this by selling to the wrong customer, by selling to somebody, a politically exposed person, somebody on a government watch list, the fines are in the hundreds of millions of dollars. So one of the other things that we are using agentic AI for now within the credit and risk space is for automated sanctions and monitoring. You can get real-time global watch list screening. You can use APIs to access something like the OFAC database, or you can, any of these other bankruptcy databases. AI can be used to uncover complex ownership structures. Sometimes when we sell to customers, we don't necessarily realize who the end customer is. We're selling to a customer that may be owned by another customer. This allows us to uncover the complex structures that might be part of anybody that we're selling to. There's also ways to check. It uses abilities such as fuzzy logic and these algorithms. It finds odd spellings. It goes in and sees if somebody's got any aliases. We can also monitor for things like adverse media. So we learn something negative. We learn that somebody's been involved in some sort of crime. Somebody has been involved in any kind of illicit behavior, something that goes perhaps against the mission of your company or goes against some political, government, or legal regulations that you must be able to follow. These are all event-driven reviews. So utilizing agentic AI, you can scan thousands of watch lists all at once. And if it sees a match, it can give you further advice and further activities to perform. A simple process, but in the long run, it can keep your company out of a legal battle and save you lots and lots of money. So let's think about this. I've talked a lot about agentic AI. I want to go back and talk a little bit about the workflow and the process for how it happens. You're sitting here and you're trying to think, okay, she's giving me some ideas, but how do I systematically make this happen? So the first part of the process is your data ingestion. You're collecting information from a variety of sources. Those sources with agentic AI can be internal or external to your customer. The internal databases, that could be your ERP, that's your SAP, your Oracle, your D365, whatever your enterprise risk system where you manage your financials. Could be your sales database, could be your Salesforce database, can be a contracts database, can be a variety of internal things that you utilize for customer data. Then you're getting information as well. It's a conglomeration of data. So now you can pull from external sources. You might be pulling from banking data. I mentioned, I frequently mention when we talk about credit risk, the agencies, the D&Bs, the Moody's, the variety of agencies out there. You can also go out to websites, Yahoo Finance, Google. You could go to sites like Edgar, where you can get 10, in the United States, it provides 10Qs and 10Ks, any 8K filings about companies. If you want information, you can go out and source it. You can also go out with the proper setup, and I say that very in quotes, with the proper setup, you can go out to any subscription database. So if you have a subscription to something, Agentic AI has the ability to go out and pull information. It could be a bankruptcy monitoring database. It could be some sort of federal database. Whatever it is, you're ingesting data now from a variety of sources, and it's combining. Then you're going through and you're doing in an automated fashion, you're scoring that risk. So you're calculating the probability that your customer might not be able to pay and that making sure that everything is aligned within your corporate credit policy. One of the things that we talk about in terms of like recommending a credit limit and what comes out of that information, which is the next step, are guardrails. As anybody who is involved in agentic AI, you're going to hear the term guardrails. It's going to get beat into your head. It's been beat into my head. Guardrails are necessary. You have to put the fence around everything that you want to do. Agentic AI is just not going to go out willy-nilly and get information. You've got to be very specific on the information you want to get. You've got to be very specific where you want it to go. You've got to be very specific what you want it to do. And when you set up all of those rules around it, then you have the ability to trust the output of what comes out of there. So I'm pulling out a credit limit recommendation. I'm getting it because I have set the guardrails around it. I've said, I want these scores, and if they're within this, and I want this. And if my data is inconsistent between multiple sources, I want it to do this task. The one thing, and we'll talk about this again and again, and I talk about guardrails a lot, but I also talk about the fact that you cannot give any AI agent too many tasks to perform. I saw yesterday some of the guys working in our agent studio here at Emagia, they were trying to set up an agent and they were giving it too many tasks to do at once. More importantly than giving it too many tasks is connecting agents. So you create a specific agent, you create another specific agent, does this task, then it moves on to the next agent. You don't want to give it too many things to do at once. And so I'll talk about that concept a little bit throughout this process. Finally, you get into the automated approval process when it comes to credit risk assessment. And again, it may tell you that you should increase the customer's credit line. It may go into your ERP and automatically adjust it. It may, if you've got approvals that are required, it might have to go to a director or a CFO or your CAO, somebody, it may send them a note to go and approve it. It will also flag those cases that might be considered borderline or unable to be given credit. So you may want a letter to go out. If it's more just strictly automation, you may want to tell a customer they've been denied, or you may want to flag somebody internally like a salesperson or a credit executive to have a conversation with that customer. Really depends on what you've set up and what guardrails you put around it. Finally, on the back end, you can have this continuous monitoring for fraud detection. Agentic AI can manage how many transactions are coming through. Are there any mismatches? Are there any anomalies? Did something suspicious come through? Did you get a payment from somebody that's not the traditional payee? Or did somebody request some information that's not traditional? So all of these things help you to set real-time limits and help you with early fraud protection. So the next thing I want to talk about is that the fact that we need to define the agents properly in order to get proper results out. We also need to review the results. So what is so important here? Agentic AI is like a child in a sense. You need to train it. You need to teach it what to do. It's not going to know that your data is not clean. It's not going to know that your data is mismatched unless you go through some sort of cleansing process. Now, you can perform that cleansing process through either, you can use AI and agentic AI to do that, see where you've got mismatched data, see if, naming conventions and things like that are set. Or you can do, prior to launching any agentic AI project, I also suggest some degree of MDM or master data management cleanup. So whether you're using AI to do that, which is the preferable way, or some sort of data cleansing, you want to make sure that you know that your source data is clean and good. If your source data is not clean and good, guess what? The output is not trustworthy. You do not want to have credit limits that you can't trust. You don't want to send information to inappropriate customers. If there are legal ramifications of sending things to inappropriate customers, sending the wrong data, especially in certain industries, you can get into a lot of trouble. So you want to perform these cross validations. You want to perform validation. You want to know whether these external sources are good and solid. One of the things that happens when you use an AI agent, at the end of the response, it's also going to tell you the sources where something came from. You want to make sure it's just like any of us that went to college and had to write papers. You need to cite where you got your information from. Agentic AI will cite its sources. You want to make sure that those sources are valid and good. You also want to be able to use various techniques to pull information to get this data. So one of the other beauties of agentic AI is the ability to pull from different types of sources. So when I say different types, not necessarily the internal and external, but structured versus unstructured data. So you can pull in information from a variety of sources. So whether it's from a PDF or you're scanning something using something like OCR technology, you're pulling in this information. So you can leverage all sorts of alternative data to get your information. So let's talk about a real live use case here. One of the use cases that I like to talk about is you've got a customer. Let's use this example. So I've got a customer. I'm a big commercial manufacturing company. I sell all across the world. One of my customers suddenly sends in an order and it's 40% higher than their traditional orders. It's going to blow their credit limit out of the water. And so I want to go in and I want my system to perform an automated credit check on it. So utilizing agentic AI, number one, it's got an ongoing monitoring. So it's going to tell you that this customer went way over its limit, right? So it's what are we going to do? It's a good customer. We don't want to say no. So we go out and recheck the credit. As part of our credit checking process, one of the things we do is go to external sources. We've learned that we have the customer has a strike going on at one of its European factories, and this is hindering their ability to produce volume. So we're pulling in all of this information, comes in, makes a recommendation, and it still says, okay, well, the strike is minimal. It's probably not going to affect a lot. We want to give X limit. It now sends a note to the CFO and says, look, we need your approval to approve this credit limit. So in other words, it goes through this end-to-end process in terms of approving credit. So as you can see, utilizing agentic AI is very useful. It helps you go out and get information. It helps you access multiple sources. It helps you do a lot of the things that you can do that we were doing before manually. So one of the things I like to highlight, one of the questions that we get very frequently is AI going to take my job? No, AI is not going to take anybody's job. What it's going to do is it's going to change the role of the risk management professional. The risk management professional in the future world is going to be the one to set the guardrails. It's going to set the rules. As it says here, credit is no longer a back office cost center. It's a front end revenue driver. We are going to utilize agentic AI to be able to drive business to manage risk. So finally, I know we've run out of time. If you take anything away from today's session, I would like you to, think to yourself, it's not a question of when It's how I'm going to adopt agentic AI. Keep in mind that when you do adopt agentic AI, you cannot give it too many commands. You need to set very clear guardrails, give it simple prompts, and start one step at a time. Since we don't have time for questions today,